Hi, this is Mark with my analysis for the week commencing the 20th of July. More than ever now, we have to start paying attention to what's going on around the world from a geopolitical point of view as well as fundamental, because of the tragic situation in Ukraine last week. And this has ramped up the amount of pressure and friction between the West and Putin from Russia, who basically has gone on his merry way for many years and doesn't give a monkey's what anybody says. Now we suddenly have world pressure against Putin and the Russian situation. So this could have a dramatic effect on currencies this week, particularly the euro related, because of the close proximity to Europe and the fact that the plane was leaving Holland with many Dutch people on board. So we're going to have to start paying attention to things. And the danger is that the risk-on, risk-off situation that Fotis has explained previously could now see the S&P pull back, and that then will have a knock-on effect on many currencies. So whereas we are always looking to tiptoe around the news, and again you're going to have to watch your calendars this week, and there's quite a few speeches this week, and speeches by the RBA governor, the governor of the Bank of England, and I think New Zealand as well this week. So they are always dangerous times, but you're going to have to tiptoe away around the news. Now, another thing that's going on, that people ask, why is the dollar still the reserve currency of the world? And there's talk about China will take over, and I think China will take over as a reserve currency very soon. China has just this weekend agreed to lend Argentina, who is also bankrupt and has defaulted on payments to other people. They've agreed to lend them 7.5 billion. And this is not because the Chinese have just become very charitable all of a sudden, but the Chinese are the biggest buyer of corn from Argentina. Argentina also has a lot of natural resources, and equally the Chinese have been getting rid of US dollars by buying up huge swathes of land in Africa, and they've put in lots of infrastructure. And again, they've spent billions. There's talk in here, they're lending 2.1 billion to help finance a long delayed railway. So there's lots going on, but the real significant thing that caught my eye in this is that they also signed another 11 billion swap operation between the central banks. And what it means now is that Argentina can pay for Chinese imports with the yuan. And this is highly significant. In recent months, the Chinese and the Russians have done a deal whereby China will buy a huge amount of Russia's gas reserves and they will pay in their own currencies. And all of this is reducing the need for the US dollar. At the moment, most transactions around the world go through New York and the US dollar, and the more that this goes on, the weaker longer term and the less relevance that the US dollar should have. So it's all down to fundamentals. Final thing on the subject of fundamentals, on Thursday, Fotis posted in his blog a copy of an article by one of the students from our new Pro Traders course. And this gentleman, Aaron, is a Canadian, and he's been with us for, Mentor Pro for many years, and he's been with the Pro course now for 3 weeks. And Aaron went into a very detailed study of what is going on in Canada and the impact that it's likely to have on currencies. So it will be a good idea, if you're intending to trade the CAD, that you check out the analysis there. Okay, on to technical analysis. We start with the British pound against the US dollar, and the British pound the other week broke 170.40, and this was significant because this was a high going all the way back to 2009, and previously in 2005 it was a low to the pip. So we have broken and closed above, and therefore, woohoo, off we go, away we go. But this is a monthly candle, not closed at the moment, so therefore not fully significant. At the moment, it's a spinning top, which is indecision. And the situation here was that a few weeks ago, the Governor of the Bank of England, Mr. Carney, started talking about raising interest rates sooner rather than later, and the pound shot up. A fortnight later, because he realised what effect it was having, making the pound too strong, he's now trying to talk it back down again. So we are at a huge major indecision area, and at a time in summer months when now lots of the politicians are going away on holiday, and therefore usually price goes sideways. So what do you do? Well, you could trade simply if bounces off 70.40 should you choose. This is the weekly chart. but it is beginning to look a little bearish. I think it's only temporary, but I would personally prefer a pullback, and I am looking anywhere around 69.50. Obviously 170 is a major area, but 169.40 would get me more interested. It's 50% of the recent weekly move. It is a weekly trend line that goes back to well into last year. And also if you go on to the daily, this is the daily chart, we also have 50% of the daily move and a 55 EMA and the Bollinger Band. Now the Bollinger could push down and open, and therefore we could be on for a bigger drop, but I am interested to long there. One clue that we're on for a turn back down is look at this for MACD divergence. That's major MACD divergence, and if you're not familiar with the term, what it means is that whereas here price was clearly bouncing and going sideways, MACD has turned way back down, and it is a big clue that price could be on for a bigger than expected pullback. If this one fails, then it will also be looking down here at the monthly 200, which also happens to be major previous support and resistance. So that's one I'm watching. Now I spoke earlier about the euro. This is the euro USD on a daily chart. Let's have a look on a weekly first. On a weekly, we're in a triangle. It's messy. It's not very clear. If it breaks down from here, then the problem is that then we're coming down to a monthly 55 as well as a weekly 200. So there's a load going on here and 78.6 of a recent move. Now we have to be careful. I've just shown you about the pullback on the pound. You have to be careful that these are not what's known as a dead cat bounce. Unfortunate terminology, but what happens is price comes down, touches it, bounces back up, then does the break. So normally we'd be looking for a triangle break. You're looking for a breakout from here, then a pullback. And I suppose it's valid. It's 100 and odd pips and you stop above the 55. So 1 to 2 risk reward ratio. Personally, the euro I explained at the beginning could be more influenced by the Russian situation on an hourly basis than any of the other currencies. And I am a little bit wary with this. Now, if the euro's on for a run, the safer way to play this would be to wait for price to close below 134.00, then a pullback, then a move down, because then we have got a stack of fresh air all the way back down to 125. So that would be of more interest to me. If you're going to trade it intraday, then you could look for a break of this trend line. You could look for a bounce back up here. The attractive thing about a bounce back up here, you would only need a little stop, and I would go down at 33.90. So 10 below the whole number, and we could be on for 100 pip back up. So 20 pip risk, 25, 30 pip risk. Yeah, it's worth it, but it is a messy one, and I personally would rather be in for a bigger move. Similarly, the dollar Swissy. The dollar Swissy in the recent weeks and months, you could simply just keep shorting at 90, and it keeps doing it. However, as explained in the past, it's a bit like a cop running at a door. He runs at the door to break the door down, bangs, bounces off it. We now have a clue on the weekly Swissy that we could be on for a move up. The Bollinger Band has swung well open. This is a bullish candle from last week. Stochastics are turning back up. There is a bit MACD divergence, but we could eventually be on for a break. And again, if this breaks and closes, I would want it to break and close above this 55 EMA, not just the 90 area. And you could be ultra conservative and go above the recent high. So you could say a clear break and close above 90.40 would get me interested. In the meantime, just be looking for bounces again. And Friday's candle was a bearish reversal candle at the top of a big move. And as I just said to you, look how many times in recent weeks you just simply short at 90, but it's not necessarily been a particularly big move. But that is one to watch as well. This is the CAD, and I showed you a little earlier Aaron's analysis, detailed study. If you're going to trade the CAD, then watch that. I've been in this on my live account for about 3 weeks now, and I took it primarily because it was a fib bounce off a monthly trend line. And for a little while it looked a bit hairy, scary, but I'm still looking at this for a potential move back up here of hundreds of pips, and hopefully my patience, discipline will be rewarded. Same pair on a daily, and I was watching this the other day, and this is what made me think, oh dear, do I get out of this again or not? But that was a never in a million years Bollinger Band that was coming down at a confluence of 61.8 and EMA, so a ton of reasons why that was going to stop where it did. Now this is a crucial area, because if the 55 this week crosses the 200 and it starts to look more bearish, then I'll get out of this. But at this moment in time, I am still favouring my long. Dollar yen. Dollar yen, I have shown you for many, many weeks. Look how many times the dollar yen has bounced off this area of 101.20, 101.30. And it did it again last week, and it did it again the second time. And it's bouncing again at this area. And if we zoom out to the weekly, see a little more clearly, this area was major previous resistance, July 2013. It was resistance in November and then support, and it has been support ever since. There have been some nasty spikes, but at this moment in time, whilst we're still in this triangle, it is getting smaller. This is the only issue with this. But at this moment in time, I would be looking at a 20 odd pip stop. You could be more conservative and go for 45, 50, but I'm still thinking in terms of 50, 60 pip gain. So I'd be interested with a 30 pip stop because of a potential 60 pip win. Anything less than 1 for 2, I'm not going to touch. If it breaks out of this area, and we've been waiting for this for months, it's more likely, to be honest, to happen after the summer, unless this risk on, risk off situation. If the Russian situation and the Iraq and the Syria and all the other tragic spots around the world start to kick off, then it could well be that there will be a rush to the yen, in which case we will change our tack. Aussie dollar, it's been messy. It broke a trend line. It's scrambling around here. We could move this trend line, I suppose, and we could start looking maybe around here. It's all a bit vague. Last week's candle was a pin bar reversal for going up. Messy and choppy. I'm trying to pick things for myself and for others who want to trade off longer time frames for bigger moves, and this to me is just too messy. If it was to clearly break and close below here, then a pullback, yes, we would be interested to short. At the moment, we're bouncing. You see, this is the last 3 weeks, and we're bouncing roughly off this weekly 55 EMA and roughly off 9,500 here. So if you're trading ranges, that's what you're looking at. You're looking for price to come down here, bounce off a situation of the 55 EMA and the trend line, and you're looking for moves up here of 100 and odd and a stop down here of 30 odd. So there is a good risk reward ratio if it's going to continue, and it quite possibly could because of the summer. So euro pound on a weekly. I said at Christmas time I thought that this would get down to 75 this year, and we're well on the way now. Now we've had just a constant fall over the last 20 weeks by the look of it now. And what it has done in the last few weeks, it's gone back up to 80 and then back down again. And that's the main area for me. The fibs don't support it, but small daily moves on this pair. And fundamentally, the euro should continue to weaken against the pound. Just a matter of getting that entry. Similarly, the euro yen. This is euro yen on a weekly. And we are now in a down channel. And the bottom Bollinger has opened. Let's have a look on a weekly, daily rather. We've got an upper trend line. It's messy again. I would prefer a pullback on this pair, but if we were to get a pullback anywhere around 138.00, I would be interested to short. Similarly, the Aussie dollar yen broke a trend line, then it's turned back through it. It's all a bit too messy for me. And even if it breaks here, you've got the 200 just below that, and then you've got the weekly 55. So there's just too much in the way. I would prefer to look at easier options. Now, many of you have been following Omar and gold, and Omar is placing trades off a very simple system. Fundamentally, you would imagine that gold should strengthen at the moment because of all the conflict, but it keeps bouncing around, it keeps breaking 1300, which has become support resistance. Then last week it was breaking through it. So these are major areas. The way Omar is playing this, as you know, is just simple breakouts of an area. And again, this 1300 was a major one. You need to check out his posts. This is the sophisticated system that he's made himself. And so I know some of you are trying this out on a beta test. And again, you've got major support and resistance. So lots of things going on here. I'm looking at different things at the moment. I've been looking at different pairs. I had a couple of nice trades on the pound CAD in recent weeks. Fundamentally, the pound is stronger than the CAD at the moment. We've had a lot more positive news out in a healthy economy, whereas Canada has been getting a drip of negative. I've simply been longing at 81.20, so just above this 81.40, just above this 81.31 line, so 10 pips above. And if you see here, you can see how price is just coming down, bouncing off. The other option is a triangle break. I wouldn't be interested personally for shorting here, but if it broke and closed below here, we could be on for a substantial move. And again, if it closed above here, this is on a weekly chart, remember guys. Last week it looked as though we were going to break it on the daily, but wait for the weekly. But this could be a significant, huge move. Similar scenario on the pound Aussie. We are right at the point of a triangle now. And the nearer price gets to a triangle, usually it means that the breakout is more explosive. And from a triangle point of view, this could be a huge move of over 1,500 pips, because the theory of a triangle breakout is that the size of the triangle is replicated in the move. So again, just watch it. Don't dive in because it's getting nearer and nearer. It could be because of summer that it simply goes sideways for longer and we need to readjust the triangle. But technically, when this goes, it should go with a bang. Final one I keep my eye on at the moment is the pound and the New Zealand dollar for similar reasons. You can see it's simply bouncing off the top and bouncing off the bottom. And if you put some horizontal support in there, there's also, it's a bit messy across there, but there's other reasons why you'd be interested to take this. And the final one being, bear in mind this is weekly, but if we fib it, you also have 61.8, 194.100. So not a pair that I normally trade, and the pound and the New Zealand economy are both doing better than the dollar, so it's a bit more tricky, but technically those are the areas to play. Okay, have a good week, watch your calendars, keep your eye on the news and be careful. And my recommendation is to be only in one trade at a time until you can get your stops to entry. Have a great week.